Hey, good afternoon, traders. This is Trader Tim from eMiniMind.com bringing you another Monday market analysis video. I've got the SPY up in front of us for starters today, and what I want to highlight, looking back over here on the left side of our screen, we've got May, June, July, lots of sideways action. But the commonality in that sideways action was kind of knocking our heads. If I go to the S&P, oops, we can see that high in the S&P right around 2135. Actual high here 2134.72. And if I go to a year to date, we can see that really most of the year we spent moving sideways. We opened up right around 2060, moved sideways through most of the summer. The decline right at the end of the summer as we went into fall, some higher volatility, and then October, November, so thus far, we've seen a nice push higher, but really back up to 2060s. So not a whole lot of directional movement over the course of this year, but we are approaching that all-time high on the S&P, 2134.72 on the S&P 500 here. So I'm going to go back to the SPY and zoom in just a little bit. I do like the price action that we have here, where we've got a couple days of decline, sideways to down, some spinning tops, nothing too drastic like a large body candle that breaks a major low. We are essentially forming a nice series, rally, pullback, rally, pullback. If we go to the VIX, we can see that it's slumped off quite a bit, all the way down back in here to the mid-teens, which is very good for trending on the daily chart. We want that volatility back, sub 20. That allows for a rather conducive environment for trading a daily chart and staying in the trend. When you get VIX up in the 30 plus range, then you get these whipsaw actions day to day. You get big body candles back to back, and you can really just get in a trade and then immediately taken out, and then it turns around and goes in the original direction. So with this last month or so, we've had a nice series of moves higher. I'm going to go over to my toss charts, and you can see the current extension we're in. I'm going to remove this and we'll back it up here. So from the gap up way back at the beginning of October, lows to highs, formed a nice 50% retracement. We traded up to the target. We got a nice pullback. We drew from the next setup, entry to high. Whoops. Grab that high there. Made a nice pullback. I think the 2007 traded basically to the tick, and then we started to break out of the beyond, rather, the negative 23%, and so we went into an extension. So from highs to highs, that took us in a nice pullback. We broke out again, so I'm just going to use that same anchor point since it essentially here worked the first time. We need the same anchor point, the new high, and that's what we came down into today, and we closed right at that 2070 level here on the ES. So what I'm looking for is a move above today's high, so today's Monday. So a move above the 2088 level would give us some conviction that, yeah, we're going to come up here and break highs and continue on up towards that 2135 level. Maybe we'll come up to 2128s and go back into a traditional pullback and then break out. I don't know, but we have a line in the sand, and that's the most important thing. Between all the talking heads, radio shows, different news media that comes out on a day-to-day basis, whether it's scheduled economic numbers, whether it's earnings announcements, stuff, forecasts going into the holiday season, we can't know for certain what is going to happen, but having these lines in the sand gives us a plan A and plan B. So plan A is we get a move above the 2088s, and that takes us higher. Plan B is that we start to break down, starting with 2060s, and then breaking the swing low back here at 2050s. And I would want to see some large body candles in conjunction with an increasing VIX, which would give us, a sign that, okay, maybe we could come back to some sort of full 50% retracement. But at this point, moving so cleanly higher, I would look for that trend to continue, especially because we're only 2 weeks roughly away from Thanksgiving. Let's see if I can pull up my little calendar. Come on, there we go. Yeah, so 1, 2, really just 2 weeks from Thursday is Thanksgiving, and then we go into a couple more weeks of trading, and then we're already into the Christmas holiday. So yeah, there's certainly a lot of things that are pointing to us moving higher, and so I'll be watching that move, especially today's candle. And looking at a break of the high, this is the lowest bar in the pullback. And so that's why this candle in particular is important. Now I wanted to talk about the some trade setups for today, both on the ES and the Euro. I'll go to the Heikin-Ashi candlestick, 512 tick chart. And we'll go back to this morning. Now I like to give the market a little bit of time to kind of open up and digest. Today was very clean. And so we had some really good setups early on, but nonetheless, whether you took setups right off the open or waited, there were a lot of opportunities. So the first one here, we opened, we drifted a little bit lower after 5 minutes or so. It's okay to start trading right after the open. I would say give it at the bare minimum 5 minutes because things are super volatile. I like to give it 15 or 20 minutes. And if I'm putting on bigger positions, wait for that 9 o'clock number or that 30 minutes of trade for things to settle down a little bit. But right at the open, 8:35, we were trending lower, so we broke the swing high. That's what we were looking for as we were moving lower. Broke the swing high, draw from lows to highs. Nice little setup, pulled back, traded to its target. If you were trailing your stop, you could just move your stop up under this next swing low, and then in this case the market turned around and moved back lower. What do we got going on? There we go. A little bit of a hang up there. So traded from lows, the low point to the high, pulled back to the 50%, started rallying, and then we turned around and moved lower, and we broke this swing low because now we're moving up. We hit a nice high to low, traded up to the 50, and then that was a nice sell-off that took us, a good 20 minutes of selling before we started moving sideways. That brought us to the 9 o'clock number, or 9 o'clock rather, and it is Central Time. And then we broke lows again. So we had a low here right just before 9, and then just after 9 we broke lows and made a little bit of a rally, broke down again, and so drawing from highs to lows because we broke down, expecting a pullback up to prior lows, which are now acting as resistance. Gave us a nice setup to short. Again, you can use the negative 23% target, or you can just trail every swing high until we, fail the trend. Now here's a little setup that is in the other direction. I like these double bottom setups, and we broke this little swing high and we pulled back. So this was totally a valid setup. We pulled back, we started to move higher. Now as soon as we start moving higher for this long, as soon as we start breaking the prior candle highs, I like to move my stop from -6, in this case on the ES, up underneath whatever the entry candle low was. So as soon as it starts going my way, I want to tighten my stop. So even though this one ended up being a stop out, it wasn't a full stop out because it started to go my way, got a little bit of a bounce, and then I pull my stop up underneath the low, just a tick below, and that also happened to line up with a 61.8. And so when we did reverse and I got stopped out, it wasn't for a full stop out. So 6 tick stops is pretty small to begin with, but when you're tightening your stop as the trade starts to go your way, you really can limit your losses. Now, we did break down again, broke the swing low, so you could draw from highs to lows and take the next setup here because we broke lows on the day, broke the swing low. So you can see how they kind of methodically go through the day, just going with the trend, looking for breaks of highs and lows on the day, break of swing high, swing low, things like that. And then as we get into the middle of the day, the kind of late morning, we did form a pretty large bottom reversal here, and so drawing from lows to highs, we broke the swing low. We tested, this was going into the 10 o'clock hour, so I tend to slow down my trading as we kind of wrap things up for the day. We got a couple of bounces off of the 50%, and this was visible on a small 15-minute as well. But you'll notice, okay, we came down, we got a fill down here at the 50%. We started to move our way, and so move your stop from -6 up underneath the entry candle, little cluster here. So now even though we came down, we retested, your stop is still tucked up underneath the low, and even though we didn't end up getting enough follow through to really amount to much, again, really no harm, no foul. Get into a trade, tighten your stop, and in this case, get stopped out and move on to the next one. So quite a few winners this morning, and then just a couple of small losers. Nothing to really write home about there. And that kind of took us into the afternoon, at which point I kind of wrapped things up at the 10 o'clock hour and call it a day. Moving over to the euro, just a couple things I want to talk about. Now, the euro has been to say the least. Not the greatest of trading opportunities, and it's just visible by, we got green bar, red bar, green bar, red bar. Not a very clean trend. But what I wanted to highlight, this was early this morning, so most of you are probably sleeping. But we have a high, and why is it important to wait for the break of the swing low? Because that confirms that the trend is now potentially shifted. And in this case, we formed a high, we started to decline, but we didn't break the swing low. So if you were looking to get short up here, you'd end up getting stopped out right away because the trend is essentially still up. There's no break of the trend. As opposed to down here where, okay, we were trending lower and we got this little double bottom here. This run up broke the swing high, so we can draw from lows to highs. In this case, it was a little bit dirty, but using a standard 8-pip stop, entry at 48s, and then putting your stop at 40s, and then as soon as it starts to go your way, move it up underneath, move your stop underneath the entry candle, and you can either trail each bar as we move higher here or trail the swing low. But it's really important to wait for that break of the swing high or swing low because that's the confirmation. That's the difference in waiting from just randomly getting into a trade versus having some sort of criteria. So while it's a very simple criteria, it's nice because you can transpose it to a lot of different markets without having to make really any adjustments. So I'd recommend going through the trades from last week, looking at the swing highs, swing lows, drawing the trends and things like that, and just really familiarizing yourself with the style of trading that you're looking at. Whether it's the 512 tick chart with the Heikin-Ashi, basically copying the exact same thing I'm doing here, or some variation or something completely different. It's important to really go through the market and constantly be looking for the setups, both in hindsight and during the trading hours, the trading day, because then you begin to train your eyes to pick out those setups as we go. So that's what I have for you today. Got a couple of live webinars coming up in about 3 weeks with Infinity Futures, so I'll post some more info on that as it becomes available. After a handful of discussions with a lot of VIP members, readers of the blog, just kind of finding out from you guys what you get the most out of, what's not the most helpful. It seems like the in-depth kind of trade analysis going through the trades, as well as the live trading videos and live trading sessions are probably the most helpful. At least that's what I gathered. So I'm going to try to do more of those, especially as we get into January. Thinking about setting up some monthly live trading sessions where you can tune in and watch me trade live, and we can answer questions and things like that. It probably won't be a 5-day-a-week scenario, but maybe every other week, or at the very least once a month, so we can kind of talk about the markets in real time. That seems to be of interest to a lot of you. So stay on the lookout for that. And as always, if you have individual questions about your situation, specific trade, shoot me an email, tim@eminimind.com. Thanks, and have a great week.